Kind of like Bigfoot. Kind of like Bigfoot. How is that working? How is that working? Oh, I know what's happening. All right, we'll get started in about 3 minutes. I think everything is working. I think being the keyword in that sentence, huh? All right. All right, we'll get started in just about 30 seconds. Well, today is Thursday, April 10th, 2025, and this is the week and charts. Obviously, I want to thank all you guys and girls for changing your day. It looks like our numbers are finally coming back up. And thanks to everybody over there on YouTube. What did we talk about? Well, a lot of what we talked about last week. My one did not. I guess I have an invisible one. Obviously, current market conditions. Boy, would I have a lot to say about that. Your questions on trading, your favorite stock, and crypto picks. You can go ahead and start punching those in now if you want. Just make sure you put the USD behind the crypto so I know it's crypto. I want to talk about a lot of the things I talked about last week. I also want to talk a lot about options. And then update the TFM 10% system, the Landry 100, and talk a lot about, or a little bit about trading and timing with the VIX. A lot of this stuff is kind of unfolding, and I know I'm a nerd, but it's been pretty cool to watch it happen. And I'm going to resume the series on a million little things will make you successful as a trader. And that'll make a lot of sense in just 1 second. There is a disclaimer screen. As you know, you can lose money trading, or as I'll have to sum it up. All predictions are about the future, and a lot of stuff can happen between now and then. There's all my contact information. Feel free to grab a screenshot. You can also email me directly at david@davelandry.com. I do have a Facebook group, Dave Landry's Trend Traders. You do have to be at least a gold member of Dave Landry to join. So I know I'll get a lot of requests to join, but you have to be a member of davelandry.com for that. All right, let's talk about the mystery charts and the methodology in action. The mystery charts, in case you were wondering, come directly from my trading service. Now, that might be a mystery chart here or there that maybe a stock or something we talk about in the Facebook group or something, but for the most part, I'd say 99% of all the stocks come straight from my trading service. So this one was recommended a few days ago, and the reason it's not a mystery chart is because if I would have recommended it before last Thursday, then it would have been in Thursday's show as a mystery chart. So hopefully that made some sense, but you can see all of these. I'll give you the archive information in just 1 second. Anyway, this thing was in a really nice trend, nice longer term Landry light in place. I didn't notice a Landry light until I was putting together this presentation. So I have it as a TKO, but it's also a Landry light pullback. And Landry light pullback, you just want 10, ideally 20 or more days of Landry light. That's the lows greater than moving average, as illustrated down here. And then you want to pull back to the moving average. So it goes from some number 10 or greater back down to 0. And then you look to get long as the trend resumes. Anyway, I had it as a TKO. You can see it made all-time highs here. And it's a bit of a double top knockout. So a double top knockout, you want a high surrounded, or let me start that over. You want a high with a couple of lower highs in between, 3 or 4 ideally, and then another high. So that's kind of like a mini double top, and that gets people to thinking that maybe the stock is topped out, maybe it's in trouble. And when it sells off hard, it vindicates the shorts, and it also shakes out a few nervous longs. That's the whole theory behind the TKO. And so the TKO in this case is kind of like, I kind of like use my mind's eye and kind of blend those two bars together. Let me just rewind that. You see these two down bars here? Well, this one's down, and this one actually closed up a little bit, but it did go lower. So that's your knockout move over 2 bars there. And then the entry was at 26.25, 21.25, and the IPT is way up here, off the charts, so to speak, at 31.25. So that's 5 points and all that. Fairly volatile stock. That's why it called for such a fairly wide stop based on the stock price. And let's see what's happening. So far, so good on that one. Knock on wood. All right, so we have a mystery chart update. This was TPR. The entry 71.50, stop 81.50, and then IPT of 61.50. Again, like I said last week, it did form a bow tie. It was a little sloppy, so I called it a first thrust forum. Ideally, with a bow tie, you want them to come together really tight and spread out to look a lot like an actual bow tie. And I'll show you an example of a tight pattern in just 1 minute. So a tight pattern would go straight from green to red, or maybe have 1 or 2 bars of yellow, maybe 3. But in this case, you had a few bars of yellow. So it was a little bit more on the sloppy side, but that's okay, because we do see that the trend has turned, and we do see that the market has pulled back a little bit, finishing up the setup. So with a transitional setup, you're looking for that market to roll over, and then you're looking to get on at the first little bit of a pullback or retracement. Now, you won't always get a deep retracement, or you can't sit around and wait for a deep retracement, I should say, because with these transitional patterns, the idea is to get in and catch the most people off guard. When a market breaks, its first break lower, you have anxious shorts that pile in, but then you also have a lot of nervous Nellies that get shaken out. Now, the people who are previously long the stock, the longer term holders, they start feeling the pain. But as a general statement, the public does not sell when a market goes down. They tend to sell when the market goes back up. Now, in this case, after a strong sell-off and the market's still at fairly high levels, historically speaking, right? They're not feeling a tremendous amount of pain. They're beginning to wake up a little bit. And then when that market begins to drop further, the pain index begins to increase. So everything I do has a bit of a psychological backing from a technical analysis standpoint. So a lot of times technicals get a bad name. It's like it's mumbo jumbo because of this complex indicator does this and the wave count of the arcane whatever does that, or Mercury goes in retrograde. But the real technical analysis, just looking at the charts and figuring out the psychology of the market at the same time, not imposing your own personal psychology on the market, which we'll dig into in just 1 second. But anyway, with the transitional setups, you have a lot of people that are caught off guard, and a lot of people, like I just said, who are waiting for that rally to sell. And if that rally doesn't come, then they might be forced to sell for reasons which have nothing to do with the underlying stock, more so fear of losing more money or needing money, as especially when you're in a bit of a bear market phase like we are now. I hate to label it, but as a general statement, it's generally bearish, right? My Kunas just somebody said, "Where are you from?" I didn't know you were Kunas. Like, oh yeah, every night in a webinar it'll slip out. I just said bearish, so I'm a little bearish at the moment. Anyway, entry was here, stop was way up here, and you can see we took a little heat at first, and of course I'm thinking, here we go again. It's a short side. Short side's a real pain in the ass, and I'll talk about that in more detail, especially if this bear market or whatever we're in drags on. But anyway, it did fortunately turn back down, and the IPT was hit. Now, when that happens, when you hit that IPT, you're going to bring that trailing stop down, okay? And then you're also going to exit half of your share. So now you have a free roll, so to speak. And barring a huge overnight gap, which of course could happen lately, right? The worst could happen is break even on the remainder. And you want to position yourself, and I did not do that in a minute. I want to show you where I did not. But you want to position yourself where you have the potential to hit a home run, the potential for unlimited gains. I firmly believe if you're trading without the potential for unlimited gains, that you're not going to make it in a business. So I see a lot of these people with these selling options or income producing, so-called income producing strategies, and I'm getting flooded with a lot of those lately. And it's like, you know, that'll work until it don't. You occasionally going to get whacked really bad in the markets. And then in order to recover from that, you're going to need the occasional somewhat unlimited gain on a position. Anyway, if you want to see the archives of these, the newer ones, what I've been doing, which is pretty cool, one of my clients from Italy, he's been begging me forever, and I feel bad not that I didn't do this sooner. I just thought it would be a lot more trouble. But he's been begging me forever to put the services up on YouTube so he can read them, or I'm sorry, watch them and read the translation. And YouTube's got a pretty good translation algorithm. It's an AI type of thing. So the newer ones are going to be youtube.com/Dave Landry. So for instance, like once the setup of the day, the mystery chart as it soon becomes, or the mystery chart, whatever, how you want to look at it. So the mystery chart would have been AGI, again, had that set up before last week's show. But after it triggers, I'd go ahead and make those services public. And on the service page, it takes me about 2 or 3 weeks or so to put them in the archives. But the archives are going to have the much older services, because I only started this YouTube thing a little while ago. And just not to digress too far, if you are looking at them on YouTube, I can see my video numbers dropping right now. You'll see a big gap because I was putting them up there, the delayed ones up a while back, and then I stopped doing that. But then I put the ones live for my international clients, and then make them public for everybody else as soon as the setups trigger. Anyway, so that's where you can find all this stuff in case you're wondering. So the idea, again, not to beat the dead horse, but it's funny. It's like if I don't explain everything, I get a lot of emails and questions that people say I use a lot of inside jokes, and and I do, but I want to try to explain it as fully as possible. So just bear with me for a second. So we buy the entire position at once, or in this case, we short the entire position at once, and this was 200 shares. So 100 shares is going to be for trading. That's going to be the swing trade loaf, and 100 shares is going to be for, hopefully, what'll turn into long-term profits. This is where your money is. This is what keeps the lights on and keeps you in the game. Win a little, lose a little, win a little, lose a little, and hopefully we risk 2% max on each position. So hopefully your worst loss per, let's say, 100K account would be $2,000, and then your best gain would be much, much bigger. Now, it doesn't happen often, but every now and then we'll get one that'll do 10 times that amount, $20,000 or so of that loss. Now, we do get a few stinkers in a row too, and somebody raked me over the coals not that long ago because they had 3 losing trades in a row. Might as well demonetize now. Shit happens, okay? And if you've been trading for more than a day, I think you probably know that. By the way, I'm getting a lot of phone calls from friends and family worried about me. I'm fine, but it's like when things are bad for me is when the market is kind of slowly making that transition but continues to go higher. That's when it's a little hard for me to readjust, and for any trend follower for that matter. Or if you have a trend that does this, and at the end of the year, you're here and here, but you did this the whole year, and it's hard to follow that trend because the trend keeps knocking you out. That's part of the program. Once you get a fairly solid trend in one direction, you should do just fine. But anyway, that's the trades. Let's see, 60. That bounced a little bit yesterday, and where are we now? Yeah, we're higher than that spreadsheet, so that's a much smaller number now. But day ain't over yet. Last week, just real quick, just to fill you in, because I want to kind of close the loop with some of this option stuff. For S&Gs, in order to establish a position, I needed to be short 200 shares of this in my model account at least. I do trade other accounts, but I do try to keep one as a model for these teaching purposes like we're doing today. And I saw the 71 puts were 25 cents, and I'm like, you know what? I can get in those puts. Then I have a position today, because it's set up triggered. And should the stock come unglued, I have a position. If it rallies or whatever, then I'm out $50. And then I'll figure it out from there. And then I decided that, okay, let's go ahead and establish my position. And so I bought a fairly deep in the money put as a substitution for underlying stock. Now, those 0 DTE options did expire, so I had to unload those. If I was doing an S&G trade, like if I bought like 10 of those 71s for $250, and again, I was just trying to mimic the model account. It's like, oh crap, this thing triggered. Instead of shorting 200 shares and put up $14,000 worth of margin, I'm like, you know what? For $50, I can get a position, and then I'll figure it out from there. And then within the hour or so, that's when I put on the position, so to speak. And that was the 2 April 17 puts at 465. But anyway, I flipped out those 0 DTE options in today, and I picked up $140. You can't do that all the time. My point here, even if it went to 0, I'd have been okay with it. The point was that sometimes, especially with these 0 DTE options, you don't have 0 DTE every day. This happened to be, these options happened to be expired on the same day the setup triggered. But if you could get in a position super cheap and then figure out how you want to position either in the underlying or via options, I think it's worth a shot. So like I said, even if that went to 0, I was completely okay with it, and I decided to let it ride. Now, just to rewind a second, what I was starting to say was, and I think I said this last week, if I was going into an S&G type of position where I bought like 10 of them, then I would immediately put an order to flip out 5 at 50 cents to pay for those options. So turn $50 in the options, 5 at 50 cents would pay for the options, and then I could figure out how I'm going to trend follow on the remainder. Anyway, so I took profits when it was 500%. I figured, let's not get greedy. That's enough at 125, and then the other one. Now, here's the puts that I bought. And again, I bought the 75 puts. They were about 4 points in the money or so when I bought them. And again, that's to try to mimic an underlying position in the stock, a delta of 100 or close to 100 per contract, means that it acts like 100 shares of a short. I guess your option people say, well, Dave, that'd be a negative 100. So, okay, I got you. A negative 100 delta. And fortunately, I was looking for a double, but with the deep in the money options, it's a little trickier to get that double. If you're playing like a gamma play or something where you're looking for that explosion in gamma, like the aforementioned 25-cent 0 DTE options, then by all means, you can look for a double. But when you're playing deep in the money options, it's a little bit different story. Now, in an ideal world, you would wait for that initial profit target to get hit and then you take profits in your options. But the option world is a little tricky, and sometimes you have to, like I said last week, feed the ducks while they're quacking. So even though the IPT wasn't exactly hit at that moment, I went ahead and, because I had nearly a double in option, I got out of them, and then I got out the remaining options for 12. So that turned out to be a decent trade. You add all up, that's 1260, and there's all the trades down there. Now I have one additional trade I wanted to show you here. First thing I did was I rolled down the 75s to 71s, okay? And at this point, I only needed one put because we were short 200 and I took off 100, so I only needed one, so I bought one of those at 6. And then here is something I did, and I was on a webinar the day before, and I'm like, geez, I wasn't sure what to do. I had a fairly deep in the money option, and the options further out were so expensive I wasn't sure what to do. And it's like I could put it on a spread, but boy, that complicates things. And then I was at a webinar, and an options expert, the options professor, was like, well, why don't you just put on a spread? I'm like, I thought about that, but then it increases the amount of moving parts, and I wanted to have an unlimited potential. But then I decided to do it anyway. Now I'm going to backtrack on whether or not I should have done that in a few minutes. But before we do that, let's just kind of take a look at what's happening here. So there's all the trades, 955. And then I did the options trade, the spread, which I'll come back to in a minute. Now, JBL was another one. And again, another transitional pattern. This is a slightly cleaner bow tie. I think the CCL is even better. But you can see we have a bit of a double top happening here, okay? So the stock then begins to roll over a little bit. The bow tie forms, and we have a pretty serious thrust down. This is a nice deep retracement. Like I said, on the short side, you can't always sit around and wait for that deep retracement. Entry was here, the stop was up here, and the IPT was down here. So we did hit that IPT on the TPR, I'm sorry, the JBL. And because of the gap entry and the spread around the time it entered, or triggered, I should say, we got it at a little bit lower than the normal entry or the suggested entry. And then the stop comes down to break even and then beyond, okay, once that IPT is hit, and we got knocked out of that one yesterday. Now, I still have an options position on this one. One advantage of options is it does give you staying power. And if memory serves, I may have rolled those options down, but they were not worth much. In a case like this, one contract left, I just let it ride. But you can see that when I took this, the snapshot is actually after it stopped out. So if it's white, it means that the trade is done. So you can see right here, it's stopped, and this is straight from the spreadsheet. You could actually see this. Should be able to see it today on YouTube. It's under the playlist core, Dave Landry's core trading service. So it's youtube.com/Dave Landry. Anyway, so that's how to trade it up. Not an ideal situation. I wanted this bottom number to be much, much, much bigger than this one. But this is kind of a better than poke in the eye trade, roughly $1,300 over a fairly short period of time. So I know it's not a good idea, but if you annualize that, if you could do that, this is like a week and a half, maybe 2 weeks. If you do that every couple of weeks, percentage-wise, that's huge, right? 1.3% gain on your account. I know it's a little fuzzy math. Here's the CCL. This one is fairly tight bow tie in here. Now, it's probably not as good as this snapshot, which I took yesterday right now because we had the big rally in there. Actually, it's better today. It's down 2 and change. So it's looking pretty good again. So it's probably over 1,000 now as far as open profits. But anyway, we had the bow tie here, fairly tight bow tie in this situation, not a whole lot of yellow, a couple days of yellow down here. Yellow is when the moving averages, 10 simple, 20 exponential, 30 exponential, are not in uptrend proper order, meaning that one's on top of the other, 10 greater than 20, greater than 30, and then vice versa on downtrends, okay? 10 less than 20, less than 30. And if they're neither uptrend or downtrend proper order, it's 0 as far as the count, and then it's illustrated down here as yellow. But you can see we did make that switch from the green to the yellow to the red. That suggests the trend has changed. And again, this is coming off an all-time high. Everybody who's ever bought CCL is happy a few weeks back from the bow tie, right? And then as the stock begins to drop, it creates more and more pain and the psychological issues we talked about a second ago. So it pulls back to complete the pattern. In this case, we didn't have a nice deep pullback, but on the short side, long side's a little different. Long side, I like a nice deep pullback unless we're in a long-term bull market that's very orderly and we have little bull flags along the way. That's fine. But on the short side, you can't sit around and wait for that nice deep retracement. And it's a bit of a leap of faith by shorting these shallow pullbacks, but you have to do it. Anyway, the entry was there, stop was up here, IPT was here. And again, when that IPT is hit, you bring down the stop and the remainder to break even. And in this case, if it continues to move in your favor, what I do is I trail more loosely to hopefully ride out a longer term trend. Now, longer term trends on the downside, much harder to ride out than on the long side, but we're going to give it a shot, and as we often do in these bear markets, as we do in bear markets. And the one thing I was kind of thinking about with the short side that's kind of cool is right now, I forget what the point stop is on this one, but let me just pull a number out there, 5 points maybe. That sounds ludicrous, but that's probably about what it is at least. One thing cool about the short side is as the stock drops in price, you can maintain that 5-ish point stop. I did let it open up a little bit, but you don't have to open up as much as you do on the long side because percentage-wise, as the stop drops, that stop gets wider and wider on a percentage basis. So kind of a cool thing about the short side. There's not a whole lot of cool things about the short side. But anyway, here we go. So at this particular, I knew this snapshot was bigger. Okay, so this snapshot is bigger than what's actually there by a little bit, not too much, but that's the idea, to capture that longer term trend on that remaining loaf. I probably need to get into a lot of I talk about them often, but I probably need to get into a lot of the nuances of trend following, and I probably need to make a note about that. But it's like when it works, it's like butter, but it doesn't always work, unfortunately. Anyway, here's all the TPR trades. And so I had these puts at 465. So I bought the 75s. And then again, I sold one at 850. So we take a look at that. So that's minus $80 total on the trade. So not quite a break even because we didn't get the double. Now, the other thing I did was I rolled down the 67s to 60s. I'm sorry. So after let me just rewind a second. So those were 75s. And then I had rolled down to 67s. Okay. So I had one put and it cost me $600 at 67. And then I decided to short one put, thereby creating a spread. Now, I'm not suggesting you do spreads. I just couldn't, I wanted to roll down and it just wasn't, it wasn't really feasible to buy those options that were further down. Now, in hindsight, I did make some mistakes here, which I'll get to in 1 second, but I didn't realize that I'd already rolled down that position. And when I saw it was in the money by quite a bit, I'm like, holy moly, I need to roll those options. And I didn't realize I'd already rolled them. And that'll make sense in 1 second. So based on this position, the maximum profit at expiration would be $395 if the stock closed at precisely 60 and that option expired. Worthless, that short option, okay? Now the max loss would be $305. Now, spreading versus rolling down during high implied volatility times. So again, my idea was that, okay, this implied is so high, I could sell this option for 3 points, and even if the stock drops 3 points, I'll break even on that position, and my long option position will cover it. One problem with that, though, is I violated my rule of not having open gains, okay? So I think part of me wanted to do this for SOGs, and I'm just kind of talking this out right now. But in this particular case, the lower strike out of the money options were too expensive to buy. And I was at a bit of a dilemma because the deep in the money options could easily evaporate. Now, I wasn't thinking in terms of the whole position and all the other trading that I'd done prior. So the potential 395 gain versus a 305 loss doesn't add up. However, and this is where it gets tricky, right? On rallies, a short put can be bought back in and reset on a drop, rinse and repeat, or is that just wishful thinking? And that brings another problem into the equation. And let me talk a little bit about it. I was going to talk about it in a second, but let me just jump into it right now. So one thing I've been working on a lot, and I'm going to show you a little bit of that, kind of a tangent from that, is what do you want? Okay, what do you want? And ideally, what you should want is to be in tune with the market. What do you want? Well, you want to position yourself for potential unlimited gains should that elusive big trend come along. And I should say when that elusive big trend does come along. So in this particular case, when the second I put on that spread, I start watching the market starts dropping, and that short option goes up in value. Okay. And I'm like, crap, down for me, up for whoever's long. And so I'm thinking like, well, what do I want? I'm technically should be short this stock. Do I want the stock to drop? Yes. But then if the stock drops, then the short option goes up in value. And it's like, okay, well, now I'm kind of stuck holding it for some time because I need to let it all play out, right? Because I collected my 395 or whatever I did on that option premium. So it becomes kind of tricky. It's like, well, what do I really want? Well, now what I want is I want the market to retrace. So I'm going to lose money over here, but I can get out of that option, and then I want the market to roll back over. That's a lot of wants. Okay, that's a big ask. It's big enough to ask for the market to move in the direction. It's a bigger ask for the market to retrace and then turn back down. Now, technically, the market will bounce from that oversold quite often and then roll back over. So maybe you could rinse and repeat. I don't know. I think I'm adding too many moving parts to the equation, and I would certainly open this up for discussion. But I think, and I'm getting a little ahead of myself again, but I think that I'd forgotten that I'd already rolled them down, and all of a sudden I see these options are 5 points in the money or whatever. And thinking that, well, I'm kind of stuck in this position because the volatility is so damn high, the implied volatility, and even the at the money options like $3-4. I can't buy those. So that's why I thought about that. And again, there's a danger for not allowing for open-ended gains. And here's the thing that complicated it even further. And again, I'm getting ahead of myself, but let's just get it out of the way. So I'm thinking like, oh, geez, I don't want the market to go down because that short option is going to go up in value. But in another account, I didn't do this experiment, so I really want the market to go down. So the more confusing things you put into your brain when it comes to trading, as opposed to I like it to go down, I like it to go up, the more animosity you're going to have. So again, with these options, when you're doing something like this, the number of moving parts increases dramatically. So there it is. I sold the option for $2.95, and I just immediately put in an order for $1 because I thought that'd be a great trade if it happened, right? And it did get filled, so I made $1.95 in a short option. So it worked, didn't it? Well, it did, but the problem again is I didn't allow myself for open-ended gains. I created a lot of mental animosity. And so I think in the future, never say never, but I'm less likely to do this again. But what I will do is if I am in a situation similar to now, if that option truly is really, really deep in the money, and I can't let that, let's say I'm 20 points in money, and I can't let that option retrace, and the at the money options are like 100 and something percent implied, maybe I might consider selling some further out the money or somewhere around that options. I got knocked out of something. Anyway, hopefully that made some sense. It's like there's always a danger in increasing the number of moving parts versus just a flat out directional play. Now, options players who are
who are successful, I should say, they understand all these moving parts, and they're okay with they see something like 100 and something percent volatility, implied volatility on a stock with a volatility that's much lower, and they realize that those prices are so high, especially if they already have a long option to hedge against, they could sell those options. So again, I showed you what I did. I'm not sure if I would recommend doing it. So here's the JBL trade. I bought these at 680. I flipped them out at 1670, and that came to a gain of 310. And then I rolled them down. So that's the original trade here. And then one of those was unloaded at 30. We were blessed with a pretty decent profit on that. And so we add up all that math, and it comes to 3310 on the position. So we sort of beat the service. We beat just trading the underlying by using options and rolling down. And I still have one option that's on. Oop, I forgot about the remainder put. So 2139. So we're still beating the underlying, which was like 1300, I think. And I still have one option on after the big retrace rally. So the options can give you some staying power. It's like I didn't throw caution to the wind. I had an option on. It was paid for. It was the mother of all rallies. I knew it likely wouldn't hold. So I figured it was worth a shot instead of trying to cash out at the absolute worst time on that option. I know you can't get a little bit pregnant, but if it is open profits, you treat them, or you can treat them a little bit differently if that's helping you to stay in the game and possibly make even more open profits. So hopefully that made some sense. I know I confused myself. Real quick, we've been talking about timing and trading with the VIX. The VIX only matters as I preach when it matters. So here we have the VIX in this funny looking chart. I don't know what these charts are, but it just came up as that. And the S&P 500 is a line chart in the background, and the 10-day simple moving average is based on the VIX. And as I've said ad nauseum, I did a lot of research into the VIX inspired by Larry Connors years ago, and I was actually working with Larry on some of this stuff, and I created a lot of stuff on my own. I would play around with it, and Larry had said that he explained to me that it was a reversion to the mean type of market. And so I took that quite literally, and the mean being a moving average, and I did a lot of research, and I found the 10-day simple moving average is a really good metric for the VIX. Now, as I preach, it only matters when it matters, but when you see these extreme stretching like we did, I think it was last August, I think it was around 60 or something on the VIX, but when that thing stretches from the moving average 10% or more, you look for a reversion to the mean. Now, if it stretches 100% or more, in this case 150% or more, get ready because that market's getting ready, that volatility is getting ready to implode, okay? And then stocks are getting ready to rally. So in this case, we had obviously the mother of all rallies yesterday from that super duper stretched VIX. So again, I'm not going to beat the dead horse on this. So it is a reversion to the mean market. I see people draw double tops and double bottoms and head and shoulders and other stuff. That doesn't work in the VIX because you're looking at volatility, and that behaves much differently than price. The VIX only matters when it matters, and high and low is relative. And through this cycle recently, a lot of people have been posting things about VIX more than 20. That's bullish. VIX less than 20. That's bearish. And it's like, it doesn't work like that, okay? So high and low is relative. Use a moving average or some sort of metric. Use an oscillator if you want. Oscillators are fine for this. Usually I don't like oscillators, but an oscillator is absolutely fine. You know, don't be a hero. VIX is at 60. Let's short it. No. Let it implode. I would only do intraday trades too on something like this, although you can get a major bottom on a spike. Now, do use it as a gauge for overbought, oversold, especially oversold like we just saw. So that can be kind of neat. Real quick, I'm not going to walk through all the details of this, but there are your signals. You can go in and watch the last 30 methodologies in actions or 50 methodology in actions on my YouTube page for more on this. But this did stop out last Friday, Now, what's painful here, as I said ad nauseum, is that when I did the research, it was done on a calendar basis. And so I followed the system on a calendar basis, and the sell was way down there. Now, the only thing I did, I had some leftover college funds for my girls, and I pulled their college funds last Friday based on the system. And this is how I've been managing those funds, because people always ask me, Dave, do you do anything long term? I'm like, no. It's like, I can't believe you don't do anything longer term. It's like, well, okay, I did the Q trade a couple of years ago, which just stopped out. And then I do it to stop me from going in and out and trading like a madman with my girls' money. I just keep them in this system, put them in an aggressive mutual fund when things are doing well, and pull them out when they get iffy and ride it out. He who fights and runs away lives to fight another day. So that sell was way down there. The Qs, which I've showed the trade before, and I think it was a 50-something% gain. The Qs were a little cooler, excuse me, because they stopped out kind of like with the designer's intent. The designer's intent was to only lose about 10% on the trade. That P's trade that I just showed you, so to speak, lost a lot more than 10% because it didn't trigger right away. But you can see there it is right there below the 50 simple and below the 10% line, 10% of the 50-week moving average. Anyway, that's that system. I know I rushed through it, but I've talked about that ad nauseum. Okay, Landry 100. I probably started it at the world's worst time, right into a bear market. And that's probably what had me giving up before. And I think the software I was using was no longer made. And so I don't have the greatest software anymore to do this, but I'm able to accomplish the proof of concept, and it helps me to pay attention to where the momentum is and where the money's flowing. And that's the whole kind of proof of concepts to the Landry 100. And I'm just buying brand new highs with this. Okay, so take a look at AGI. The stock that we just talked about a few minutes ago is not a mystery chart. So that was bought on 3.5 when it was making new highs. Now, as I've said ad nauseum, I don't recommend you rush out and buy new highs as a private trader, unless you could buy like 100 of them at a time. And this is all hypothetical. I did experiment with a little bit. It failed miserably so far, and we'll see what happens. But for the most part, this is just all hypothetical. So the buy was there. Again, I wouldn't buy just one stock at a breakout. If you're going to do that, you need to buy 100, okay? And statistically, one of you guys was a while back was saying, well, statistically, you won't have to buy 100, but I don't know what that magic number is. I'm always nervous when you try to use statistics in a market. Easier for me to say because markets aren't normally distributed. Also, statistics are worthless. 73.4% of all people know that. Anyway, the buy was there, and knock on wood, it's had a pretty good little run so far. Now, one thing kind of cool, before we get to that, notice right here, I zoomed in on this little area down below, and it's a Landry 100, right? Well, there's only 61 stocks in there. So what happened was lately, I've been pulling stocks out, and I haven't found any that I want to put back in. So I do treat cash as an asset class. So there's 100 slot, 39 slots are in cash, okay? And then the 61 remaining are still in stocks. Now, what's kind of cool is if you zoom in, and we've been talking about this quite a bit, but this is one kind of cool thing about doing an experiment like this. And notice up here, this asset management, this is actually a physical gold too. All of these are golds. What's about the only area rallying right now? Gold, and that's it, right? So this is putting you in those golds. And also, if you take a look at like groceries and some healthcare stocks, although healthcare is not doing well, but these are more defensive type of issues. People still have health troubles in bear markets, and people still eat. And I think there might have been a tobacco company in here at one point in time or not that long ago. People still smoke, and some people smoke more. Now, it's kind of interesting. There are a few biotechs in here. Biotech's kind of a weird sector. As a general statement, you want the sector behind you when you're trading, right? But sometimes biotech can have a few little standouts that defy gravity. So we'll see how these work out. where are they? They're right here. But so far, it looks like they're not working out so good. So those might actually get pulled. But there are a few biotechs in there that have showed up. All right, random thoughts. We'll just run through quickly. Momentum does end badly. And when I initially put that in here, it's by ended badly, I mean that in the end, you give up some of that trend when you stop out. You still make 100%, but you don't make 140% or whatever you were up here. You give up a lot of that in the end. We did have one a couple of weeks ago that just absolutely imploded, lost 95% of value overnight. So that can happen. It happens, with a silent SH. Relative strength of the bear market is okay, but they eventually find you. You notice those biotechs really wasn't doing that well. And that's because they were doing okay, even though the market was doing poorly. But eventually the market will drag down all stocks. The only exception might be a commodity related stock that could head higher. So there's always a bull market somewhere. That's one of the myths I put into the layman's guide to trading stock. There's not always a bull market somewhere. It's still a great way to see money flows, and cash is not trash. And again, it's treated as an asset class. All right, any questions at all? I know I threw a lot out. Let's see what we have here. Let me check in here. Oh, lots of questions. Okay, good. I wish I was paying attention so we could have done this. Okay, a debit vertical spread is always a great directional strategy because you are passing off some of the risk to someone else. The stock probably won't go to infinity. Passing off reasonable upside risk is a good move. Okay, all right. Yeah, we'll have to talk about this more offline. That makes sense. A debit spread, you are selling the delta, gamma, theta, and vega. Well, I know what some of those are. What's vega? Change of volatility? Theoretically great, but flies in the face of K. SSR. Okay, you kind of lost me on that. So what makes the position more stable, less volatile? Okay, I got you. Yeah, that there's always something to do with options, and it's fine. I find that the best option traders tend to be more like brainiacs and engineering type. Like I think Larry Millen is an engineer by trade, or was before he became a trader. So yeah, that does well. But yeah, we'll have to pick that up. So with a debit spread, are you short the inside, long the outside? Seems like you'd still would limit your gains on a position like that. All right, as I've said ad nauseum, and this series has continued on for quite some time, everyone thinks that they're gonna have a big epiphany and bam, you're a trader. Now you will have a lot of little epiphanies, and that's kind of along the lines, okay? So CJ says, keep it simple is what I meant to say. Yeah, I'm with you on that. Yeah, absolutely. Now, I think that if you were super deep in the money and the implieds are just absolutely ludicrous, and you could go out further than at the money, that might be worth a shot. S&P 500 is down 500 points in the day. Options are implied of 150 or 200 or whatever the case, something just completely ludicrous. I wouldn't say almost free money, but I think you could possibly make a case in a situation like that. Anyway, just to rewind a second, everyone thinks that when you become a successful trader, you'd have a big epiphany, bam, and then, okay, I'm a trader. And the reality is you'll have epiphanies, but it's a lot of little things. And you got to put all these little pieces together. So it's tons and tons and tons and tons and tons and tons of little things when it comes to trading. Now, I was looking for a way to explain this. This is something I've been noodling with and writing about in the mornings, along with a few other things along these lines. Is that you really want to be in tune with the market, seek to be one with the price. And then I got to thinking about how do I express that metaphorically. And Greg Morris, his column over at Stock Charts, and I don't know if he's done many lately since he's retired, but it was called Dancing with the Trend. And he wanted to name his book Investing with the Trend the same thing, but the publisher didn't like the name or whatever. And I think it's a much better name than investing with the trend. The publisher was looking for a broader audience who would understand. But anyway, long story endless, dance with the trend is what you really need to seek to do. Number 34,984. Now, what's the one thing you should want as a trader? And you know, obviously we all want to make money, but how are you going to make that money? Well, there's only one way to make money trading, and that's to capture a trend. If you short a market here, you have to cover here. I'm not saying buy low, sell high. And if you buy a market here, you have to sell it here. From here to here is a trend. Okay, that's the only way to make money. So realistically, as a trader, what's the one thing you should want? And the one thing you should want is to seek truth in price. What is, unless you're Bill Clinton. I did not have sex with that woman, Miss Lewinsky. You want to seek truth in price. Bill Clinton, he used a Chewbacca theory when he was asked if he had sex with that woman. For those of you who are a little younger, and he's like, it depends on what the word is, and like, okay. But you want to seek the truth in price. Is it going up? Is it going down? Or is it going sideways? Much easier said than done, as long as you're not an active participant. As I've said ad nauseum so many times that I've gotten credit for it, but the real author or whoever was Linda Raschke. Linda Raschke said, if you want to know which way a market is headed, ask a 6-year-old kid. Now, let's say you're long a market and the market's going up. Well, your reaction is, yay, everything's good, right? You're in tune with the market. You're dancing with the trend. Everything's great. Let's say the market's down and you are short the market, then once again, you're happy and you're dancing with the trend. Now, the animosity comes in when you're long and the market is going down, or short and the market's going up, and all of a sudden you're kind of upset. Well, if the market is headed in your direction, everything's fine. You just follow along like a good little trend following moron. But when it's not, you tend to have a little perceptual distortion. It might obviously be in an uptrend, but you might see something a little better. You might say, well, it's bottoming out or whatever. And its first cousin is selective perception, okay? You ever long a market, it goes down, it goes down, it goes down, it goes down, it feels like Chinese water torture. And all of a sudden you get a little bit of an uptick and you're like, oh, thank God it stopped going down. It's going up now, right? Well, maybe not. Maybe it's just taking a breather in the downtrend. And that's selective perception, okay? So selective perception is seeing the things you want to see. Perceptual distortion is actually seeing something that's not there. And that's where your 6-year-old kid can help you out quite a bit. The other thing that happens quite a bit, and this is something that I was a little hesitant to start this week because there's so much that I think could come from this. But another thing would be like just justification and confusing the issue with facts, okay? News and, well, this tariff thing might just be temporary or whatever the case may be, as opposed to looking at the charts and trading the charts. All right. Any questions on that? Any thoughts? Let me see what's going on YouTube. Any questions over here, guys? I'm not seeing any. All right, let's keep going. All right, let's shift gears and hop into crypto. I doubt there's a whole lot to do, although I did see a few of them, but there's not going to be probably much to do in crypto. So let's get the crypto up and running. And I'll get that screen shared. All right. So we take a look at crypto. Bitcoin's been a real disappointment. And as I often say, the 30 EMA is your best friend in crypto and stocks and gold and whatever other asset in fart coin, whatever asset you're trading. It's a breakout in fart coin. I couldn't buy it. It's like, okay, I finally confused the issue with facts. It's like, no way. Not that I won't ever buy it or buy another meme coin, but I just figured it wasn't worth a shot. Anyway, you can see we did have a couple of tags of that moving average, but it never really got above it. We never had any Landry light. Not one low was above this moving average. So for now, Bitcoin's in a downtrend. Maybe it's bottoming out a little bit here. I was in a webinar a few days ago, and we were talking about Bitcoin, and they were kind of making the case that Bitcoin's beginning to decouple a little bit from stocks, because if you look at Bitcoin, Bitcoin's more bottoming out than stocks. Not that you want to buy Bitcoin, believe me, it's still in a downtrend. And that'd be great with me. I would love to be able to, if stocks are choppy or not doing anything or going down and I'm short as much as I'm going to short or whatever, maybe if Bitcoin's going up, I'd be happy to buy Bitcoin. That's fine with me as a trend following moron. But anyway, so hopefully we'll see some decoupling, but I wouldn't get too excited just yet because on a relative strength basis, it's slightly better than stocks, but nothing to get excited about just yet. But let's hope, and I know, hope in one hand and the other. Let's hope it continues. Ethereum has really been abysmal. Look at the Landry light here for a long, long time. We hadn't had upside Landry light since, let's just use this low here, 33.85. So that has more than halved in value without one bar of upside Landry light. That's huge, okay? And that shows you how simplified trend following, it doesn't have to be my stuff. I know I probably should say my stuff is the best, but simplified trend following, as I often say, it all kind of looks the same. Okay, it's up, it's down, it's sideways, right? And the 30 EMA is as good as anything, and I know a lot of people use a lot of other things, but just something simple like a moving average or just eyeballing a chart, okay, is the left side. This thing's dropped 50% and 75% from the high, so it's in a downtrend. Simple as that. Now, as I often say, and now's not the right exact time you want to do this, but sometimes when the market is blowing and going, you can come in and just buy the ones that are going straight up, like that one. But right now, when Bitcoin itself is not doing fantastic, that's your bellwether. You need to be really cautious and careful about just playing the relative strength game with these shit coins, okay? That one might be goal related, but there's not a whole lot to get excited about. And as you go through these, you'll notice that most are below the 30 EMA, so leave them alone. Okay, let's shift gears again to stocks. No questions on crypto. All right, so just not a whole lot to cover in crypto, and that's fine, okay? We'll just sit on our hands a little while longer there. So let's hop into stocks real quick, and then we'll look at your individual stock picks if you have any. We hadn't had as many stock picks lately because, as I say each week, we talk about stocks in the Facebook group. S&P 500, obviously we had the mother of all updates yesterday when that VIX imploded and the market just took off. Unfortunately, and here's kind of the interesting part, I've been telling everybody, it's like, this VIX is nuts, this market is super oversold, we're going to see the mother of all updates. Go in and watch the weekly charts, go in and look at the service, whatever you want, but I know I've said it 100 times. And then yesterday we had the mother of all updates. Now today, obviously, market lapped lower and it sold off fairly hard so far. We're bouncing a little bit now, but it's looking back to looking pretty ugly. Now, believe me, last night, you'll go and look at the service. I'll make it live today if we don't have any new setups. I don't think we have any new setups, so yeah, I think we're fine. No, it's no new setups. So I'll make it live, but you'll see I didn't get too excited about the market like is this the bottom or whatever. It's what happens next that's important. If we roll right back over like we've done so far and take out yesterday's lows or beyond, that would really be of big concern for me. But let's just take things one day at a time. Right now, not looking fantastic, okay? And again, if you have any stock picks, punch them in. I'll be happy to look at them. Let's take a look at the NASDAQ. Something interesting happened this morning. We got a deck. And that's when the 50 drops below the 200-day moving average. Now, if we back the chart way out, if you tried to trade the death cross, meaning that you shorted the market when it crossed below, and then you bought the market when it crossed above, I think you'd have I want to say I did the math, if somebody else did the math, I think you'd have an edge of about 4%, which if you looked at the drawdowns and everything else, is just way not worth it. So that in and of itself is not useful. But if you go in and watch some of my older YouTubes on this, where I spent a lot of time talking about the death cross, what is useful is what happens next. Okay, so look, when did that death cross happen? Let's see. Yesterday, the 50 was, yeah, okay. So yesterday, on yesterday's close, so where did we close yesterday? Let's just back the chart out one day. So yesterday we closed at 17,124 in the NASDAQ. Write that number down. That's the day of the death cross. So it's the drawdown from that that becomes important, the magnitude of how far the market drops. Now, the reason it doesn't work mechanically is because if you wait for, in this case it did, I guess, but if you wait for the market to drop and then come all the way back, by the time it comes all the way back, that rally might be done. But where it does come in use is it is a longer term signal, and you can go back to like right in here, you can see that was 2022, and that was a pretty serious spill in the NASDAQ. So let's just kind of eyeball this and let's see what happens. That's like a 30-something% drop. Now, if you go back to the P's, S&P 500, and you look at some of those death crosses, that won't let me go way back in time, I don't think, but if you go way, 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 way back in time, you're going to see that the magnitude of the drop below the death cross is huge. And I think I actually, if memory serves, if you go to my YouTube channel and search for death cross, or go to my website, davelandry.com, and search for death cross, you'll get some posts and videos on the death cross. And again, that's the 50 crossing below the 200. And it's the magnitude of what could possibly happen below that after that happens. So again, you don't want to trade it mechanically, but it's not completely worthless. Let's take a look at the Rusty. Like I've been saying, the Rusty fails to disappoint and disappointing, although yesterday we had the mother of all rallies. It was up 9% and change, but today we've already turned back down. So Rusty's kind of ugly. Okay, Rusty's a good example of the death cross. Okay, now I know it's big zigs and zags in here, but look how much lower the Rusty is now than it was when it did its death cross. Okay, it was around, let's say 129. Okay, it dropped to as low as 116 or 115 and change. So that's a pretty substantial drop percentage-wise, right below that death cross. And so far, we're not finished dropping. Now, we're not going to know the bottom until it crosses back over, but it can get pretty ugly. And, you know, it might cross back over right around where it crossed down, and then you scratch out if that were your trading methodology. But that's not how you should use it. You should use it as, aha, this is a longer term signal. Something bad could happen below that death cross. All right, let's just bang on a few of these areas. You know, back to the bummer department. Copper was one of the good looking areas, but it imploded. So I thought we might see some copper stocks. That didn't happen. Gold, the commodity, has done okay, and that's why we're long AGI. And if you have grandkids and they have college funds, I'd put all their money into just this one stock, AGI. I write that down. That's a joke. That's me jokingly talking my position. So don't edit that out and take it out of context. But AGI doing great, fantastic, best looking stock in the world. Let's take a look at gold stocks themselves. Now, gold stocks themselves a little all over the place, easier for me to say, but they are banging out new highs today. So that's certainly a good thing. It is good in a bear market or a bearish trend like this for gold to get a bid. You want to see some areas rising, especially the flight to safety areas like gold, and ideally you want to see bonds too. That means that the baby's not getting thrown out with the bathwater and everything's getting sold. And those kind of markets are kind of scary. Let's take a look at bonds. Bonds are a bit of a bummer because they were bottoming out for some times, but they're imploding too. So that's certainly not a good thing. There's no need to go through all of these sectors, but if you just pick a few of them, most of them look like the market itself. Let's take a look at the EFA shares. This is the rest of the world. Rest of the world was doing okay, like ha ha ha, tariff boy, and then all of a sudden they did the Amber Heard, right? And you can see EFA shares have imploded. So the rest of the world was doing okay. Usually we sneeze and the world catches a cold. That's the old Wall Street adage, one of the few true adages. And they kind of ignored us for a while. They didn't seem to care, but it eventually caught up to them. So that's kind of ugly. And again, getting back to the sectors, just throw a dart. There's biotech. You can see it's turned back down almost to these brand new lows, NASDAQ biotech at least. The list goes on and on. Take a look at the transports. You can see they've been in a bit of a spill so far, just pulling back. Jets have been absolutely abysmal, looking really ugly in here, or pretty ugly. How's that for an oxymoron from a trend following moron? Take a look at, let's take a look at the defense stocks. What is that? ITI? Nope, it's not that. Now, here's another case, and this proves my point, all right? So you're like, okay, Dave, well, the market's headed lower, but, there's a lot of wars going on in the world, and there's a lot of military equipment, right? So let's buy some defense stocks because they're at brand new all-time highs. Well, they imploded too. So it's like everything gets caught, and it catches up. The market catches up to everyone. A falling tide sinks all ships, I think is the old adage there. I'm not sure who to attribute that to because I've seen it in books 100 years old. But anyway, banks, another one's areas that remain in a downtrend. Again, throw a dart. Most of these areas, mags, looking ugly too. Okay, you kind of get the idea. It's pretty ugly out there, except for, of course, gold, and that's pretty much it. Even utilities and some of these other areas that you think would be a little bit defensive are kind of looking ugly, as you can see, really ugly, I should say. All right, any individual stocks you guys want me to look at? I'd be happy to do that now. While we're in impasse, obviously I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule. Anything unanswered, davelandry.com. Everyone have a great weekend. I think most of you here today are in Facebook, so I'll see you in Facebook after I take a little break, maybe get a bite to eat, and I'll be there. I'll be hanging out in Facebook, so I'll be there if you need me, or if you have anything you want me to chime in, I'll be happy to do there. Everybody else, again, have a great weekend, and hopefully see all you guys and girls. Oh, you know what? Next Thursday is Easter. I'll probably take a break next week since it's Easter and resume the week of charts the week after. Again, everybody have a great weekend, and I'll see you in a couple of weeks. Thanks so much, and may the trend be with you. You're welcome. Thank you.